Hello, this is dollar index on the weekly time frame. A quick update from the last video we made of dollar index. We said that we will be anticipating some reversal off of this FVG, this weekly FVG, and we just saw it, and we marked this guy, this weekly FVG, to be filled before we will expect the market maybe to take these lower lows. On the higher time frame, on the monthly, this is exactly what is happening on the monthly. Still on the dollar index, we are on the monthly time frame, 1 month time frame. We saw that there was a sweep of liquidity here. Market manipulated right here. Okay, let me draw it. There was a sweep of liquidity here. There was some manipulation. All this one manipulation, and we can also call it some kind of first break of structure following the bearish version of the standard trading model. Yeah, I am going to show you clearly on the weekly time frame where the first break of structure is very clear, and its high is around here. So what I will be expecting the market to take this higher high. Yeah, after taking this high, then I'll be expecting this lower low to be taken. This following this model here. Yeah, we said with a sweep of liquidity, right? First break of structure, it's high right here. This is where you take your sell to potentially target this high. So right here, take your sell here. So we are targeting this lower low. Still on the monthly, to reinforce our confluence of the market taking this lower low, we are seeing after the sweep of this liquidity, right? We can see the market displaced, dropped rapidly. Yeah? There was a bigger displacement, leaving some fair value gap, an imbalance in form of an FVG, and I insisted or I stressed that mostly when an FVG is formed, when the market wants to go in certain direction, it displaces, it leaves some gap, right, showing us that that the momentum maybe on the bullish or the bearish is very strong, and the market always tends to go back, refill that FVG before we smash our targets. Okay, is it before or after? That's the question that you should ask ourselves, right? It's a very good question. Yep. Will this market feel this FVG first before you rally down to take these lower lows, or will we take this high first, these lower lows first, before we come feel this FVG for some reaction? Yeah, that's something very crucial. Okay. We'll talk that another time. But I'll be expecting because we are now on the discount zone. Let me just move on the next time frame. All this analysis I did on some video there. I'm gonna put that video on the link. However, you said there was a sweep of liquidity here on the description. I'm gonna put the video on the description. There was a fast break of structure around here. We see the market coming for it, going for all liquidities was lying there, but this stronger high was strong, and naturally we'll expect this guy to be taken. That is the bearish version of the standard trading model. I've drawn it bad. It is not usually drawn like that, like this. First leg, first break of structure, go back, it, then ta-da, target. first break of structure, take your sell here, take your profits here. So that's exactly what is happening here. Yep. So we are going for this lower low in the long run. That is my prediction. Anything can happen, so we are ready for it. Of course, we now the weekly FVG see the reaction of that. This line here was I'm gonna drop down on the lower time frame and see and show you exactly how the bullish version of the standard model just printed at this area here at the fill of this weekly FVG. So this one was the first break of structures, lower low, where the market reacted, and the lower low was somewhere there which was not taken, and the market reversed with a bigger momentum to refill that weekly FVG, right? So what do we expect after the fill of this FVG? The logic with the knowledge I have in the markets and the back testing, that after the fill of this FVG, that is a form of internal liquidity, then automatically we'll be now targeting this external liquidity. So this is what we are targeting on the weekly time frame. Let's drop down on the lower time frame to see whether our bias on the weekly is confluent, is the same as on the lower time frame. Right here is on the daily time frame. Yeah, this is exactly the guy that I was showing you. This guy here, the first break of structures. See, after the sweep of all these liquidities, this flash here, or sweep of all these liquidities that were lying, stop losses that were lying around here. So we can see the clearest first break of structure was around here, right? And this guy was the first break of structures lower low, whereby it was mitigated. See, the high had the stronger lower low that was formed here, not taken. The market reversed up. Yeah. So it is very, very important to note that using this model, I am making some things clear here. Yeah, this is just a part of my journal, right? With everything that I learn from the markets each day, and every day I try to journal them. Yeah. Yep. And I think someone can also learn from them, or they can backtest and find out what all this means. Yeah. So in this model, we said we take our entry at this lower low to just here, but it is very, very important to note what was happening all this. See all this guy here, but remember, this guy was not taken. This stronger lower low was not taken. Sometimes the market will come and just weak at this lower low, right? Just come weak and boom, goes. Right? But also the market will tend to just weakening on this lower low and going. You take your partial, right? It's very, very a good idea also. Sometimes also the market will dig all the liquidities that was lying, all of this in the daily time frame, and if you measure this risk exposure that you could have been in, if you sort your order here to ride up, then you'll be on a bigger drawdown. What was this market looking at this lower low, below this guy, below this first break of structures lower low, right? It was looking for a goalkeeper, right? I use the term goalkeeper to refer it, right? There's some region it was looking for, the last man standing on the goalpost. And it's very important to note how that goalkeeper is found, right? How where is the goalkeeper? because see this you take your trade here, sounds so impulsive, and your stop loss right below here, right below this lower low, right? Oh, it will be very, very important that you see find out where the goalkeeper is, where to set an order or to change the bias. See, you can't just go bullish when this guy is swept. Immediately this guy is swept, you can't just go that bullish unless the goalkeeper is fully mitigated. That's when now I change my mind to go bullish with of course with a sign, with a displacement that we are now moving bullish. That's the logic how I usually look at these markets, right? So we can see there was a fill of a weekly FVG which I just removed around here, and you can see there was a liquidity line here. Everyone can see that. And let's begin from here. This setup I broke down on the video on the last. I'm gonna put that video on the link on the description. Yeah, so we had a first break of structure, right? This high, you take your order, boom, the market smashed this lower low, ta-da, right? And on all this move here, the clearest first break of structure that we can see was only this guy where the market was kind of consolidating. Yeah, so this market kind of goes there, sweeps that liquidity there, and still above this liquidity here there was a weekly FVG, right? The market has already mitigated it. This sweep of liquidity was just a sweep one. This was a manipulation, right? So where do we target next? This lower low. But are we ready to get those lower lows? This displacement here was a big, yep. And naturally, with this big displacement, when the market when the market comes back to refill that imbalance, it always reacts of that area. Yeah, naturally after the fill of this FVG, then we will expect this high to be taken. Yep, we'll expect that high to be taken. But will that high be taken? This is a question that we should ask ourselves. And see, following our model, this high, the one that is supposed to be taken. That's our prediction. Yeah. So if this high is to be taken, that means we'll react off of some goalkeeper around there, because we had a sweep of liquidity here before we come to take these lower lows. Yeah, there's also that possibility. There's also that possibility. Take these lower lows, or the chances of the market breaking this high and goes up there, for me, are very, very minimal. But it is what it is. Anything can happen. But I would expect this market to reverse off of somewhere here, or take this high because of this confluence here. Take this high, reverse off of some. When the market gets here, that's when I get us to react. And that is it. But in the meantime, for the first 2 days, Monday, Tuesday, maybe I'll just sit on my hands. I'll see what is happening here, this chart on this market. Yeah, that's on the daily. Moving on, I am also going to drop down. This one now is in the 4-hour time frame. Okay, magical. Interesting here. Stop here. You can see after the sweep of liquidity. I don't know exactly what the sweep of liquidity, somewhere around there. Yeah, I believe so. So we swept some liquidity, right? That is on the daily time frame, and then we saw the same manipulation on the still on the daily time frame, but it is very interesting where the market will going to reverse from. See this guy? This is the farthest or first break of structure that you can see after the sweep of liquidity around that, right? This liquidity here, this guy here, just mitigated. Ta-da! And the market wicked on it, and we are down. Yeah, nothing is random in this market, man. You are just going for liquidities. So the market reacting off of that. This now was on the, you see now, that is now the bearish version of the standard trading model, because we had a sweep of liquidity there, right around here, right? All this flash here above here. But remember, this is the 4-hour time frame. Okay, so we are now this guy of the remaining one. That's market wicked on it, and we are down. King on it. See, we've not yet mitigated the goalkeeper above here, so we might be expecting this market to rally up, check this high marked on the daily, to mitigate some form of defender, right? After mitigating it, then we drop down to smash this lower lows as we continue with our buyers. Yep. That is exactly what we can say. What I can say about what is going to happen the next week. Yeah, this is just a prediction. Yeah, this is just my own bias, subjective, and everyone has their own analysis on the on where the market should head. But despite of all this analysis, yeah, I always execute my setups, my trades using this version. Without this model printing, then I'll be sitting on my hands, right? I'll not be reacting. I'll be patient. That's exactly, yeah. See, with this model, we can predict. We can predict where the market is heading in the higher time frame, but I can always drop down on the lower time frame to execute, right, on the 30 minutes, mostly on the 30 minutes. That is where I look for those patterns. Without it, then cool, I'm out. And the good thing of this model is that I can take partials. Partial profits. Not that if the setup is not high quality, then I will leave before the market revises on me. Yes. So, that is exactly what I wanted to say. Yeah. Some guy was asking of MT4 screenshots. Oh my. There's a journal. That's just my journal. That is it. And I don't think. And I post whatever you want. That's what I can say. See, it's a good thing. It's a good thing that he said that without MT4 screenshots. Let's consider not the ones that were that screenshot that are not edited. It is important that on one side it's important to have to make money, yeah, in these markets before you come to display whatever strategy you're using. Whatever your analysis is in the market, so that people can see, because people like to see the results, right? That's one side of the coin. But I sat down after I think it was last year, that is before the beginning of November there, of December. And then I said, I'm very clear that I'm not yet profitable. That's something I should be making it very clear, right? And I feel like why don't I just document my journey to profitability on YouTube, right? But now with all this nonsense that someone needs MT4 screenshots, then that one is kind of just I don't okay, I can't say it. I believe if you want screenshots, that guy who wants screenshots for MT4 to prove whether this thing is working, just look for their mentor, because that is the person maybe who could want to prove that what they're teaching works, right? Just find their mentor and for proof of whatever works in this market. But for me, this is what I'm just sharing, and this is my style of doing it, right? But one thing, I trust the process, right? And for now, this is exactly what I'm doing, right? And they say, anyone who posts these charts, who does this analysis, most of the people who do this post charts, post their profits, right? They can't assume to be still the newbies, still the guys who are curious in the markets, who have not made the market, but the big boys, right? Those guys who have already made it, they don't even have time to teach all this stuff, right? Because they have already made it. Yeah, but yeah, so if you see me doing this, all this analysis of what and what, and it's a process, trading is a process. It will get to a time, there will be no of the chart work, and it will be hard to get this information. Yeah, it will be hard to get this information, and someone will have to pay for it. Oh, that is exactly what I can say. It let's enter a new week with a lot of energy. Let's see what this market has for us. So thank you so much, and take care, guys.